Well, good evening, everyone. Welcome back to the channel. So I want to talk about the YMAX and YMAG funds again and point out some observations that I noticed today that I haven't heard talked about too much that need to be taken into consideration. So let's just hop right to it. We will go to Yahoo Finance. And so far, it looks like both of them had a decent day of trading. So we're going to start out with the first one here, the YMAX fund. The very first thing that jumps out at me that I didn't cover in the last videos, or if I did, I can't remember. But why go back and watch? Just do another video, right? The expense ratio is higher on this one than most of the other YieldMax funds. The other YieldMax funds are 0.99%. This is 1.28%. So I just hopped out of a quick little discussion there. And some of the folks on there were actually defending the expense ratio pretty staunchly. I mean, I have no firm opinion one way or the other. I'm just pointing out that it's higher. So, you know, that's something to be taken into consideration. I guess the thought process is that if it were lower, then more money would flow out of the other funds into this one, because this would possibly generate a higher rate of return. I mean, we don't know. It's not that old. But anyway, so there's that one. Since January 17th, we're actually up 50 cents or 50 cent in the fund from 1990 all the way to, well, we were at 2066 on the 29th. We had the Papa Powell pullback yesterday, and then we're up to 2039 today. So we're getting a little bit of appreciation. I'm eager to see what the dividend is going to be on this one. Of course, we won't know, maybe for a month or two. As far as performance today, up 1% in this one. And then for the YMAG was, let's see, 1975, so up 26 cents or 1.35%. So this one actually outperformed today. So as far as, you know, which one is going to be better than the other one long term, obviously we'll see. We're already having an interesting debate on it. Some of you think YMAG, some of you think YMAX. Maybe you all can vote in the comments which ones you think are going to be better or which one you think will be better. Me personally, I see valid reasons for both. You know, why either of them could outperform the other. But as far as YMAG, as far as the expense ratio here, 1.28% also. So it's a higher expense ratio, and this one really is only like 3 days old. So we're still down about 30 cents from where we were January 30th. We made some of it back today, obviously. And then we have the after hours, which I'm going to have to do a video explaining the after hours, why there's so much movement in the after hours. I know I've asked Jay this before, and I think he gave a very nuanced answer that was just over my head. But anyway, so that's a key point that I wanted to point out here as far as the expense ratio being higher with both of these. Also saw that Meta had a really good day today, or I heard. I didn't look too close at the market. Today was an office day for me. Yeah, we were up $4.64. Ooh, we got an earnings blast in Meta. That's why. How about that? We're going to be way up tomorrow. Oh, this would have been a juicy call option here. Dang. Imagine that one. I'm sure some of you played that carefully. All right, let's see what we got here. Kruckerfeller is on and says, I prefer to just buy all 18 YieldMax ETFs and build my own index using a Fidelity basket portfolio. Why buy YMAX and pay more fees? Yeah, the fees, I think, are going to be a hot button topic. I know that aspect will have its defenders as well as its opponents. And, you know, for me, I guess I don't understand why they wouldn't just keep them all the same. And then Jonathan Harris here says, I would assume YMAG would outperform YMAX long term. Magnificent Seven should outperform stocks like Disney and XOMO. Well, I think any stock will outperform Disney at this point, right? But they can always raise the price of Disney Plus even further. So, yeah, I think, so you're actually agreeing with what I said yesterday. I thought, based on looking yesterday, I thought that the YMAG would actually outperform YMAX, but I think the consensus is leaning towards YMAX. But The good news is we will find out one way or the other. So, and then again, I can always ask the advanced equipment here, will YMAX outperform YMAG? Let's see what it says. It says very, very doubtful. Okay, so maybe you're right after all. Yeah, Disney is a disaster for sure. Anyway, well, Meta is looking really good tomorrow. So yeah, we had a good day for the Magnificent Seven. Good day for the markets overall. I need to start trading some options again. S&P did really well. Dow did incredibly, almost 400 points up. Look at that, 369. NASDAQ up 1.3%. So looks like we recovered everything from yesterday that we had lost. Russell 2000, though, is still not at 2000. So we're keeping close track of that. And a reminder, the TNA fund is a very good fund as far as like playing the Russell 2000. I got into it myself. I put my entire HSA contribution for the year 2024 all into TNA. So that whole thing went into that. We're up to 35.66 today, up $1.46. And as you all know, the way these triple levered ETFs work is that when you go up, it's 3x of the upside. It's also 3x of the downside too. So it's more risky. It's a leveraged ETF. So, but I think that if your thesis is bullish on the Russell, then it's a good play, because if you're going to be up, say 20% in the Russell, this would be 3 times that. I've done this with the S&P one, the UPRO, and I've done this with the TQQQ as well. Wish I'd done that one sooner, but the UPRO one has been very, very nice for me. Okay, let's see what we got here. In theory, YMAX would have less risk than YMAG. I agree 100%, because it's supposedly, if you agree with the diversification theory of finance, it's more diversified, right? Because it's across 18 funds as opposed to the Magnificent Seven, which, you know, may or may not be so magnificent forever. But hopefully they will stay magnificent. That's what we want, right? As soon as Tesla goes to minimum $13, I'm selling it. Oh, when it goes back up to 13, selling it, going all in on YMAX, because it's all the funds with good dividends and easy to manage the NAV. Well, YMAX is all of them, right? I mean, even the ones with the bad dividends too. I agree with what the other commenter said, what Jonathan said up here, because the other one has the crap, you know. This one, you know, I mean, we'll see. We're going to see, obviously, which ones do better, for sure. But the takeaway from the video is that the expense ratio is higher than you think on these. The YieldMax expense ratio isn't exactly the cheapest. The ones we looked at on our last live stream about the SPYI competitor, the QQQI, that's a lower expense ratio. If you're concerned about that, I honestly don't pay attention, but it's noteworthy that, you know, this is actually one of the highest expense ratios for a fund that I think I've seen. There's one I can think of that's higher. It's worth looking at if we want to. I'll try to stretch this out here. The Goff fund. The Goff fund was another, I feel like that was one of the favorites before YieldMax. And I haven't looked at it in a while, so we might as well. So GOF, the Guggenheim Strategic Opportunities Fund. This one has one of the highest expense ratios I've seen, and it took a plummet last year. They're not showing expense ratio now. I can't remember off the top of my head what it was, but I think it was pretty high. But anyway, the dividend here is like 18%. So it's the same dividend percentage roughly as SVOL. But we fell over here. We fell significantly all the way down to 1184. We recovered a bit, but we're still not back to where we were. But yeah, I was going to use that one as an example of a really high expense ratio, but it's not displaying here. So anyway, all right, we'll do a few more comments, and then that should be it for now. Let's see. Do you reinvest distributions via a drip, or do you take the cash and manually reinvest it to YMAX or other stuff? Well, this may make me sound a little dumb, but I just my accounts rolled over to Schwab a couple months ago. I have not set up the drip. I don't actually think that I know how. It's such a new broker, and I feel like I've become acquainted with 5 or 6 different brokers at this point. But as far as that one, I honestly, I don't want to set up the drip. I just do it manually. If I want to reinvest, I'll reinvest. Because I had a situation with E-Trade a few years back where I tried to disenroll or unenroll from the drip because of COVID. Right before COVID, like a lot of stocks hit their 52-week highs. So I had big positions in stocks like Blackstone and Verizon and some other ones like that. And the dividends they were paying were going back in, but they were buying shares at the 52-week high. So I didn't want to do that. I wanted to use that money and buy new stuff that I was finding as a decent opportunity. But it was so difficult for E-Trade to unenroll it to where I kept having to call and they had to like hard code it in there or something. I have a whole story about E-Trade, but I'm not a fan. Like they used to be great, but it just, the service kind of fell off over time. And because of that story, I don't enroll automatically in the drip. I do it myself if I choose to. So anyway, I'm currently taking the cash buying MGK. Thinkorswim desktop, still great for the visuals. I love Thinkorswim, still my favorite. Schwab has something that's a competitor, but I haven't tried it out yet. Let's look at MGK since you mentioned it. That'll be our bonus here. And it may pay us a bonus if it does well. Let's see, MGK. Sounds like short for magic. Oh, mega cap growth. I love mega caps. They're some of the top performers. Let's look at this one, a good old Vanguard fund here. How about some good old growth funds instead of these yield max high dividends? Okay, let's see something here. Oh yeah, I read this one. Okay, all right. One more fund for the day. We're already off topic, but that's okay. This will be bonus. All right. All right, so one more fund for the day. If my yield max dividends are high enough this month, I'll just use them to buy a new MacBook that actually is faster. All right, so the Vanguard Mega Cap Growth Index Fund, ticker symbol MGK, was up to 270 today, up $4.04. It's up also in the after hours. This one goes back to like 08, and it's been a straight run up all the way to 2021. Then we had the pullback. Then it's come back again, and I believe it's exceeded its prior highs. Yeah, it's like $10 above its prior highs. So that's awesome. Very low expense ratio. Look at that for comparison, okay? For the Vanguard funds, that's one of the lowest expense ratios I've ever seen. 0.07. That's a huge contrast to what we just looked at. So yeah, consider that. And mega caps, typically, mega caps are going to give you some of the best growth in an up market. Like in my 401k, I'm all in these. And like I said, the accounts kicked butt last year and doing well so far this year. Yeah, I like it. Like I said, good old-fashioned growth ETFs. Okay, you all. That's about all I have for this one. I'll be back later. Thank you all for tuning in. Like, comment, and subscribe if you haven't already. Join the Discord. Spread the word. And we will see you all soon. Take care.